sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be elaborating on two different charts, but going and get started. Here first off, these horizontal lines with these green little zones in correspondence to them, I've already gone over. These are the, if you take the bear market drawdown, each of these bear markets here on the chart, this is the halfway point from top to bottom or from bottom to top. There's been a clear significance of this in terms of flipping it for support throughout these bull markets. As you can see, each of these four zones also lining up with the same time period as well, going all the way from around June to November, with around August, September being in the center of each of these, as we are coming into this this horizontal zone here. You can see the first three, each of these occurred after we had already broke above it, whereas our current one is below. Outside of that, what I've added here on this chart that I've never gone over before is each of these dark blue or purple moving averages. We have this uppermost one being the 200, the second one, this is the 400, the third one is the 800, the fourth one is the 1000. These are estimated moving averages. The fifth one right here is the 1200, and then the sixth one is going to be the 1400 estimated moving average. This one goes all the way down to, it meets the wick low going all the way back to the March crash in 2020. The 1000 EMA meets the wick low going back to August of 2015. And in general, the uppermost one being the 400 estimated moving average generally lines up with the kind of latter portion of the bear market. When we start to print, can't really see them here on this chart, but when we start to print the pink vector candles that go over on this channel and the content on this channel with respect to the RSI being heavily oversold across Bitcoin's history. But the main thing that I wanted to update with respect to this is if we zoom in here on this is the 2-day chart, we can see that right now we are lying within the zone of right here being the 600 EMA and the 800 EMA right here. You can see how the 800 EMA was pretty clearly significant resistance going back right here around August last year, and then also to these two local highs we set right here from around January to February of this year. You can see this is what held us under. You can see this wick right here back May of last year was also not perfectly to it, but for all intents and purposes, essentially stretch it down to this estimated moving average. We can kind of look at this this moving average as being the one that kind of denoted the bottom range, as we were seeing resistance in these areas. I pointed out we've flipped it so far. We found rough respect to it in terms of support going back to June of this year, when we bottomed out relatively around where we have already wicked to at the lowest, basically just 24.8, 24.9 thousand, just roughly 24.7 at the lowest. I do believe we will ultimately find support here so far. As I said, or I believe I said in one of my past videos, until we start to see Bitcoin close below around 24,000, I don't think there's any reason to entertain anything significant down to the downside from here on going forward. If we do lose 24.5, 24,000, really the first criteria that's going to be around 24.7 thousand. But in general, 24,000 is the staple. I do think that worst case scenario, things go down to 20,000. If we lose 20,000, then I think for all intents and purposes, that's probably going to push below around 19 to 18.5 thousand. And if we end up losing that, I do think that more than likely than seeing a retest of around 17.6 down to 15.4 thousand as the bear market low currently, then we'll probably continue to go lower which I've talked about in the past. If that does end up happening, and I'll touch on it again later on in this video, but to get that out of the way, the final thing on the 2-day chart is if we pay attention here to the turquoise moving average, the 50 estimated moving average within this purple band, we can see that each and every single time, if I go back throughout the history, look at the most recent bull market leading into this double top, these two highs right here, we see we flipped it once. We had this minor, I suppose this would be an exception of what I'm pointing out, this minor flip right here, but for all intents and purposes, we had the major bull market from around March 2020, led in 64 to 69,000. We got the major flip of the 50 EMA below the 100 EMA and the green moving average, and eventually the 50 EMA. Once it goes below the 200 EMA, the white moving average is when things really start to flip. Around roughly halfway into each of these bear markets, we see that. We go back to this previous one back here, we can see 50 EMA flipped green, then it flipped to white. We dumped, we crossed it once, and then we see that the only other time in history that we, actually this is the only time, not the only other time, this is the only time in history in Bitcoin's entire 14 years that after we had, as I showed here, a major bear market, we saw a 50 EMA flip below the 200 EMA, we saw the cross of the 50 EMA back above the 200 EMA, and that's right here leading into the March crash was the only time when we saw the 50 EMA go back below the 200 EMA. And what is interesting here is that you can see that once we finally crossed it, given that moving averages are lagging indicators with respect to price anyways, which just makes sense what I'm about to say, you can see once we actually got this cross, Bitcoin had already set its low and was on the uptrend, the early moments of the uptrend, and has led us into the most recent highs we've seen, again, 64 to 69,000. And so if I go back to the prior to that bear and bull market, we can see that we had the major flip right here. This one was similar in terms of harmonics to what we currently have we've seen most recently from 64, 69 down to 15.4 thousand. We see this very, very brief flip right here, which makes sense for those of you familiar with the content on this channel. The price, in terms of kind of the geometrical progression of how price formed from this top up here around 1200, 1300 down to the low, is the same as our most recent bear market. But anyways, we see that brief flip, cross back above for a short period of time, then we see the major flip around halfway, leading in halfway, ultimately to the final dump of the bear market. We then reach our bear market low, where we range sideways for a period of time, and then see, again, we see the flip right here happen, and you can see throughout this entire bull market, we never crossed back below, similar to how things occurred in 2020. Going back here, essentially the same thing. We just see flipping below, start to flip back above. You don't see some sort of subsequent cross, like I mentioned again from right here, March of 2020, and then brings me to where we are currently. We're very close to seeing that. Zooming back out real quickly again, like I said, this being similar to the 2014-15 bear market, we saw a brief flip back above, had the major flip below, leading into the lighter portion of the bear market, into the range low that we saw right here diagonally in this range, similar to how I pointed out in 2015. Then again, zooming here on this uptrend we've seen since we set this double bottom right here, November to December of last year, we broke out of the macro falling triangle, which found a retest right here back in March of this year at around 19.7 thousand. You can see that we got the bullish flip right here, 15 EMA back over the 200 EMA, May of this year, and we are coming very close. We've already went below the 50 EMA, has gone below the 800 estimated moving average right here. So if we do indeed end up actually seeing this 50 EMA go below the 200 EMA, I believe that it will be something very similar to how it behaved going back to March of 2020, like I pointed out. As I've been saying, I do think that the upcoming bull market, because I do personally think that we are in the early stages of the bull run, will be most similar to from March of 2020 to basically from March of 2020 to the high we set back in September 2021, and then from there on we'll enter just basically a descending channel bear market for into 2025, 2026, maybe very early 2027. But so again, like I was saying, if we do see that flip, I do believe Basically, it will be similar to what I pointed out in March of 2020, where we're going up as this EMA flips below it for a brief period, and because it is a lagging indicator, we'll start to move back above while the price is continuing to go up here. Again, that is all on top of what I want to go around this chart. Like I've been pointing out, we can see on here, we're seeing ever since Bitcoin broke out of this macro falling wedge, roughly 2.5 years long, we found the retest, right, like I said, right here on 19.8, 19.7, back in March of this year. We've been in an uptrend. This uptrend channel we can see on here with respect to the double bottom, the final double bottom we set November, December of last year. Then into this uptrend, as we can clearly see on here, we've been in a bearish divergence for each of these three areas right here, where we set highs in this uptrend. We've been in a bearish divergence that entire time. And then on the flip side, we've been in a hidden bullish divergence going all the way back to November and December as well, compared to obviously these subsequent local lows right here, March, so on and so forth. But most importantly to this recent downside we've met around 21st of August to our current time, as we've been seeing some positive upside action here recently. So I do think, again, just to reiterate, we saw something like this happen in the bull market, build up and into the bull market of 2015 leading into 2017, where we saw bearish divergences and bullish divergences printed and continuing the uptrend despite the bearish divergences. In general, what I just said is being a rule of thumb when it comes to price fluctuating with the channels, whether they're ascending, descending, etc., and the combinations of types of divergences to continue and signal uptrends despite it looking like the price may be weakening or deadening, the trend may be deadening, so on and so forth. So again, so we have this macro falling wedge here. We have this green dotted line that is a 50% point. We take the bear market drawdown from 69,000 to 15.4 thousand. Then the green line is halfway of that. Again, it basically lines up at, specifically it's around 32.6, 32.7, but really 33,000 just be some sort of psychological whole number. I think will be very important once we flip that. I'm personally looking at that as the final opportunity in terms of like a breakout trading sense to buy into Bitcoin leading into, again, the bull market. Like I said, that is my bias. I don't know if that's going to happen. Things could go down for all intents and purposes, which, like I said, I'm going to touch on that. But I do generally think that most things are pointing to the fact that we have entered into a bullish pull-up, into a bull market. Outside of that, so this black arrow we can see pointing into the very top of this yellow range. This yellow range is the range from 40 to, so approximately 40 to 50,000. This is the range created when you take the breakout target of the falling wedge, which is this black arrow right here. The breakout target, if you were to consider this right here, so just a very unorthodox cup and handle, lines up within, it creates this range. And then also, if you were to look at this right here, this is a megaphone pattern that I just drew. We've seen this weird unorthodox consolidation retesting with respect to the megaphone pattern. That also is one of the patterns I factored in, creating this approximately $40,000 to $50,000 range. The fractal pattern that I have here on the chart is copy and pasted from going back here to September 9th, 10th, akin to the bull run that I believe we'll be seeing, again, according to my phase cycle theory. For those of you who are familiar, if you're not familiar, cards and links being in this video will have me elaborately going over what I mean by the terminology I use in this video. And then I just overlaid it on top of this, which is, it's rather ironic because we just recently made our lows around 8th, 9th, 10th of September. Again, that brings in the whole temporal confluence I've been pointing out, which goes back to this chart right here and each of these black bubbles I went over earlier in the video. So right now, this downtrend we've been in, going back to the local low of July, roughly July 12th to around August 7th, 9th, 8th. It's pointing to significance. The 50 EMA is also sitting right there, 200 EMA roughly. But realistically, as I've been saying a lot recently, 28, 29,000 short term. Our price targets look out to break above, find support, and then outside of that, surpassing 30 to 31,000. Once you pass that, then the final and like I said, line in the sand, I believe is going to be basically 32.6 to 33,000. Once we cross that, then I personally believe that the breakout target of this macro falling wedge, whether you want to look at it as a cup and handle, the megaphone, whatever else pattern, I believe that will then fulfill some sort of action into this price range. I mean, it could happen, you know, something more like this, where we hit the bottom, we consolidate here for a period of time, and then we kind of go up towards the top, and then we come back down. I mean, I could draw so many different patterns, like I say, fairly often. I mean, the bull market can unfold many ways. Obviously, I don't know how it's going to happen, but this is my personal bias, something more rapid, not exactly like this fractal pattern, but more rapid parabolic action, rather than seeing, like, you know, some sort of like impulse Elliott wave buildup where we have multiple, you know, medium term consolidation sideways towards the downside, some sort of retracement, etc. So all of this brings me to the bearish interpretation. Most recent video I made, I really kind of went over all of this for the most part, but just to quickly touch on in this video, if we do look here at the macro falling the wedge we've been in, we can see that there's a confluence zone, basically roughly, you know, within this rough ellipse that I have drawn on here. With respect to the current time where we lie at, I mean, if we were to, and like I said in my last video, I think if we do see, you know, if we do lose 24,000, we then head to 20,000 and lose 20,000, and then we then don't just retest the prior lows around 15.4 to 18,000, and we actually go lower, then I think after that, there's a possibility around 13,000 to 14,000, but there really seems to be a lot of strength towards, realistically, looking at within this ellipse that I drew, around 11.5 thousand. So basically, roughly around right here, or around right here, down to around roughly 9.7 thousand. We can see though, with the vertical line for my cursor, roughly right here currently. I mean, like I said in my last video, I think that if we do come down lower, it would take no longer than basically the end of this year. I mean, at the lowest, that would put Bitcoin going down to 9,000 very beginning of this year. Again, with respect to this horizontal zone, the ellipse, and the confluence, the convergence of these support and resistance of the macro falling triangle we've been in. There's also other trend lines that I could draw if I were to go back to this area back here, and then draw on roughly with respect to the candle close, or my bad, not that right there. It's roughly right here to the wick of March of 2020. You can see we come down, and this actually takes us even lower to around 7.5 thousand. And that's a trend line you could look at, but at the end of the day, it is just like a singular trend line. And unless you have a bunch of other reasonings to think that it's going to come down to that, there's only no reason to think that. But just to kind of sum everything up, I think some sort of decisive action will be taken within this bubble right here, which roughly is, you know, no later than, generally speaking, end of this year. By the end of this year, I think, whether we enter into another, let's say we see a significant retracement similar to the March crash, around 20,000, maybe we see some wicks down like 19, even 18,000, to be super drastic about it. And then as a second option for a bear scenario, then I think we would come down to no lower than 10 to 9,000. Perhaps we could wick to like 7.5 thousand, but 10 to 9,000, well, 11.5, around 9.5 thousand, like I said. Could find support around 13, 14, maybe even 12 above that. But that is the worst case scenario, it seems, around 10 to 9,000. If it comes to the upside, again, like I said, I think before the end of this year, perhaps likely, you know, before November's really out, I think next month is going to be very big. I personally think that the decision will be made sometime next month, rather than, you know, November or December of this year. But again, my specific price target is around 180,000 to 250,000. This is what the pattern looks like. I think, like I said, not exactly like this, but I think we'll see a rapid, very parabolic bull run into next year. I think next year will be when Bitcoin tops out, personally, but it could happen just generally speaking next year, which is 2025. I think the first peak will be around 210 to 240,000, and the next peak around 150, 280,000. And then after we set the second peak, it will basically be fairly similar to something that happened back here. We had first peak, second peak, and then we enter the kind of latter half of the bear market. But outside of that, that was all that I really wanted to go over in this video. It ended up being a lot longer than I was anticipating it to be. Kind of went on some tangents I wasn't really thinking of beforehand. But anyways, again, none of this was financial advice. By all means, do your own research and make your own decisions. Don't listen to what I've said. But just factor it into your actual decision making at the end of the day. But all that being said, everything gone over. I hope you enjoyed. Hope you're able to learn, and I hope you all have a blessed day.
Ooh, I'm regretting